Moneymakers. If you're an entrepreneur, creator, or self-employed business owner without a real tax strategy, let me spill the tax tea right now. You could be earning more and still operating without the structure required to build wealth. Far too many business owners think earning more is the answer. But if your tax strategy is weak, more money can just mean bigger mistakes, more stress, and more money slipping through your fingers. So today, I'm breaking down 5 smart tax moves every entrepreneur should make if they want to build wealth, protect cash flow, and keep more of what they earn legally. And moneymakers, don't let this tax tea spill and miss it. Hit that bell, subscribe, and let's get into it. Welcome back, moneymakers. I'm Miss T, also known as the Tax Fairy. And on this channel, we talk tax strategy, smarter money moves, and how entrepreneurs under 6 figures can keep more of what they earn legally. If you are building a business, a side hustle, or a creative brand, and you are ready to stop overpaying, stop guessing, and start operating with greater structure, then you are in the right place. Now let me spill the tax tea. I have been in tax strategy for over 23 years. So when I speak on small business tax planning, self-employed tax strategy, and the financial decisions entrepreneurs need to make, I am not speaking from theory. I am speaking from experience. I have seen people generate solid income and still remain financially stuck because they never learned how to structure what they earned. And I have seen entrepreneurs under 6 figures make far stronger financial decisions than people earning significantly more because they understood timing, documentation, tax exposure, and strategic planning. So this video is for entrepreneurs, creators, gig workers, and self-employed moneymakers who want a real tax strategy, not social media myths, not surface level advice, and not guesswork. Tax move number 1, stop confusing tax filing with tax strategy. Let me spill the tax tea. Many entrepreneurs assume that filing a tax return means they have engaged in tax planning. That is not the same thing, sweetie. Tax filing reports what has already happened. Tax strategy helps you decide what to do before it happens. That is a far more sophisticated conversation. If the only time your tax professional speaks with you is during tax season, if the conversation is limited to collecting documents, and if no one is asking how your income is evolving, how your business is growing, or what your long-term objectives are, then that is a filing relationship, not a strategy relationship. Now let me spill the tax tea from experience. One of the most common mistakes I see is entrepreneurs waiting until they make more money to become more strategic. That approach is backwards. Higher income without a stronger structure often creates greater tax exposure, more financial inefficiency, and more avoidable stress. And that is exactly how someone can earn more and still remain behind. Tax move number 2, use purchases strategically, not emotionally. Now let me spill the tax tea carefully because this is where many entrepreneurs make expensive decisions and call them strategy. A deduction is not free money. It is simply a reduction in taxable income. So just because a purchase may be deductible does not automatically mean it is wise, necessary, or well-timed. A deduction does not make the item free. It does not automatically improve cash flow, and it certainly does not transform an unnecessary purchase into strategic decision-making. Now let me spill the tax tea from experience. I have seen business owners acquire vehicles too early, equipment too early, and expensive tools long before they were truly prepared to use them effectively. All because someone told them it's a write-off. That is not strategy. Strategic entrepreneurs ask better questions. Do I actually need this? Will it improve revenue or efficiency? Is this the right time to make this investment? Can the business support it without strain? That is how you move with discipline instead of emotion. Tax move number 3, clean up your healthcare tax game. A great many entrepreneurs think of healthcare as nothing more than an expense. But let me spill the tax tea. This is one of the most overlooked areas where business owners quietly lose money because no one has taught them to approach it strategically. If you are self-employed and paying health insurance premiums, you need to understand what qualifies, what belongs where, and how it should be handled properly within your broader tax structure. If you have employees, you also need to understand whether benefits are simply an operating cost or whether they can also support retention, planning, and long-term business stability. Now, let me spill the tax tea from experience. This is not the part of tax strategy that tends to go viral. It is not flashy, it is not trendy, but it affects real money year after year. And many business owners lose money here because they never pause to ask the right questions. What am I already paying for? What qualifies? What am I overlooking? What should be structured more intentionally? This is the difference between simply paying expenses and thinking like a strategist. Moneymakers. If I'm spilling the tax tea and it's helping you think differently already, go ahead and hit that like button. And if you want more videos on tax strategy, smarter money moves, and how entrepreneurs can keep more of what they earn legally, make sure you hit that bell and subscribe. Because over here, we are not just discussing income. We are building structure, discipline, and long-term wealth habits. All right, let's keep going. Tax move number 4. Think beyond deductions and start thinking in assets. One of the clearest differences between entrepreneurs who remain in hustle mode and those who begin building real wealth is this. One group asks, what can I write off? The other asks, what can I own that creates leverage? Now let me spill the tax tea carefully. I am not telling you to go out and acquire ill-timed real estate, poorly chosen property, or assets purchased simply because you heard there may be tax benefits. I am telling you to shift from a spending mindset to an ownership mindset. Because at some point, if you want to build real wealth, you have to stop asking only how to reduce taxes this year and start asking which assets create long-term value, strategic leverage, and a stronger financial foundation. Now let me spill the tax tea from experience. Many entrepreneurs remain stuck because they operate reactively. Everything becomes last minute. Everything becomes survival. Everything becomes short term. But wealth building requires better questions. What am I building? What am I owning? What creates leverage? What strengthens my future? That shift is significant because real wealth is not only about reducing taxes, it is about making more strategic decisions with what you build, what you acquire, and what you preserve. Tax move number 5, revisit legacy, not just income. And let me spill the tax tea, because this is where many people disengage far too early. Legacy planning is not just for the wealthy. It is for anyone building something they do not want to leave in confusion. Many people hear terms like estate planning, beneficiaries, and long-term structure and assume those conversations are for later. Not quite, sweetie. Those conversations begin the moment you begin building something worth protecting. Because the real question is not simply how much money you make. The real question is this: who gets what? Who can access what? What happens to your business if something happens to you? What happens to the accounts, the documents, the responsibilities, and the things you worked hard to build? Now let me spill the tax tea from experience. I have seen far too many people build businesses with no real order behind them, no plan, no updated beneficiaries, no will, no business continuity, no instructions, no clarity. That is not legacy. That is loose ends. And if you are serious about building wealth, then you have to think beyond today's income and begin thinking in terms of long-term protection, structure, and order. So let's bring all 5 smart tax moves together. If you want a more intelligent small business tax strategy, here is the tax tea. Move 1. Stop confusing tax filing with tax strategy. Move 2. Use purchases strategically, not emotionally. Move 3. Clean up your healthcare tax game. Move 4. Think beyond deductions and start thinking in assets. Move 5. Revisit legacy, not just income. And here is the larger lesson behind all of it. Most entrepreneurs do not have an income problem first. They have a strategy problem. Because when your money is disorganized, when your decisions are reactive, when your systems are weak, and when your tax decisions are driven by emotion rather than structure, you can generate a solid income and remain financially stuck. Now, let me spill the tax tea from experience. Prepared beats flashy. Structured beats rushed. Documented beats assumed. Every single time. That is how entrepreneurs stop overpaying, start building more intelligently, and create something that actually lasts. Money makers. Generating income is one skill, but knowing how to preserve it, protect it, and use sound tax strategy to build wealth is an entirely different discipline. If this video added value, go ahead and like it. Comment below which tax move you need to focus on first, and make sure you hit that bell and subscribe so you do not let the tax tea spill and miss it. Because over here, we are learning how to make money, structure income, master tax strategy, and build something that lasts. And trust me, money makers, your future self will thank you for the systems you begin building today. And that's how we keep working magic on your money.